we're at this education conference.
Yes, we are.
You were just saying I always see you at the strangest places.
Yeah, it's amazing.
It's Vegas. It's a Warriors game. I totally wouldn't mention the Warriors. But this education thing, there's a lot of money here. There's a lot of publicly traded companies. There are a lot of investments going on. You've made investments in education. When you look at the world of education as an investor or just as a person, what do you see as being screwed up?
Well, I think there are going to be a lot of universities that go out of business, and I'm not talking about the Apollos and the University of Phoenix type for-profits, but schools themselves.
We're seeing some of that, Corinthian colleges,
right? Yeah, some of the
stocks,
right. But if you look, Sweetbriars, you're starting to see some changes, right? And I think what people and investors fail to realize is that, let's just say for the sake of example, school charges $40,000 a year for tuition. You lose 1,000 students, that's $40 million a year. There aren't a whole lot of companies, particularly education-type companies, that can adjust to a loss of $40 million. So what's happening, and I'm looking from an investment perspective, for companies that support keeping kids in school, because if a kid goes through school in 4 years...
At a postgraduate level?
No, college or postgraduate for that matter. But if a school keeps a kid and graduates them in 4 years, that's a much more cost-effective graduation for the school. So Ronku, which helps attract students, Payback, which makes it more cost-effective for books, for kids to get books, retention systems, which keeps kids in school with counseling systems. Those help schools reduce their costs so they can deal with the ups and downs and demographic changes as kids go in or don't go to school.
So one of your investments is a company that does just that. It monitors, it uses sort of big data to monitor. Yeah. Talk about that.
I never pronounced Keith's last name right. So Clarity Retention Systems, right? So what they do is they help schools put together monitoring systems. So when kids are doing things on their own schedules, or you have to turn in things, particularly if they're online students, you want to be able to monitor them. And if something isn't happening on time, you want to be able to send an alert not just to the student, but to the school as well, so they can proactively take measures.
Because we've been hearing about this conference. These schools have these advisors, and it wasn't like that when we were in school. I think at least it wasn't.
Well, they had them, right? We just never used them
because we were both blowing off classes. I wonder though, for those schools when they look at this, they've got a whole different interaction with the student because it's happening digitally, and it's not just in a classroom. There's
exactly right. So it's not the traditional way that we were used to, where you go to class, you take roll call, and either you're there or you're not. Right now, it's completely different. A portion is online, or all of it is online, and you want to know. It's not just about taking the test at the end of the semester, like we used to just show up and do. So you want to know if the kid is tracking to make sure they're reaching their milestones in order to be successful, because it's harder to self-monitor when you're taking online classes, or just general the way classes are today in colleges.
One of the other things that's changing a lot is the way the books work, the way that, and I know you've looked at that from an investment standpoint as well.
One of my Shark Tank companies is Packback Books, right? And what they've done basically is try to.
It's not backpack.
It's Packback.
It's Packback.
Yeah, Packback.com.
Got it.
Yeah.
So I thought that was my dyslexia coming.
No, I get it all confused all the time. Anyways, particularly before coffee. But what they're trying to do is re-engineer the whole ebook approach to college textbooks, and they're working with publishers now to try to come up with analytically the best approach to selling textbooks. Not just the physical textbooks, but ebooks, replenishing ebooks, and in some cases, kind of a pay-per-view for books as well, so that you may just need, you may be like me, I didn't buy the books because I couldn't afford them, right? And so I would borrow
them. Use books or borrow the books. Yeah,
I would borrow books. Now you can rent them for a limited period of time. So trying to create almost a windowing system like the movie business, so that you can get your books at the way you need them, when you need them, at the price you need them, and create new revenue streams for publishers.
Do the publishers want that, though? Because their business of selling books that get opened 3 times is a pretty good business.
They're learning they don't have a choice, right? Because as school gets more and more expensive, it's one thing when, your books were, a set amount, right, and you had a good feel. But now, as college tuition is just dramatically just expanded and grown so rapidly,
something like 3 times the rate of other inflation.
Yeah, rate of any other inflation. What's happening now is that the marginal cost of those books appears to be enormous, and kids aren't always making the choice to buy them, or they're renting them, or they're buying them used, and so they're not getting the renewable revenue sources that they used to. Packback now comes in and says, okay, we're going to analyze that for you and come up with the best solution.
And you got that one on a Shark Tank.
Yeah, they were.
Are you making money on those investments?
Yeah, I've had one go out of business, 2 that should be out of business, but they aren't smart enough to know it, and the other 30-some are doing well.
And how do you do that? You allocate a certain amount of capital towards that ideal year?
No, I mean, I'm fortunate in that I don't have to limit my capital allocations, so I just try to find great ones.
You have the strangest investment philosophy of anyone I've known with money.
Well,
because you seem to just sort of like throwing them out ideas.
But, on Shark Tank is one thing because I'm trying to support entrepreneurs as much as I am. If I'm outside of Shark Tank, I'm looking for home runs, right? So when I invest in Clarity, when I invest in Go Ranku, who helps companies go out and find new students and find the best outcome-based values for students, then that's a different type of investment than what I do on Shark Tank.
I don't know if I've ever told you my favorite Mark Cuban story when you weren't involved. I'm going to tell it to you now.
Okay.
Broadcast.com days, two guys are standing by the water cooler. I'll tell you their names later when we're off the air. But one guy's, they're talking about something, and you walked up to him and said to one guy, "Is he trying to sell you something?" And he said, No, Mark, we're just talking. And you said to the other guy, "Is he trying to sell you something?" No. And then you said to them, "If neither one of you is selling something, then you don't need to work here. If you're not selling something, leave. If you're going to sell something, go to your desk, pick up the phone, and sell." And you may remember that incident, or maybe you do that all the time.
All the time, right? If two people are talking and no one's writing a check, you're wasting your time.
So is that the approach you bring to your investments, where you try to say, because I know you did that with the Mavericks, where you took over a team that was really struggling and got people on the phone and call up and sell stuff?
Yes. I mean, I always say sales cures all, right? If you don't have any sales, you don't have a company. There's never been a business to survive without sales. But on the flip side, things are a little bit different now because there's no IPO market. And so now you almost have to do things that are different milestones in the short term in order to set a platform to be able to raise money or get to profitability much more quickly. So now, I mean, I'll allow companies to platform, but then you immediately have to go to revenue unless there's something just dramatic about to happen.
So, but we still see that in Silicon Valley, where you've got the Snapchats and the Pinterest and companies that are out there for a long time.
But even that's changing now. No, that's changing rapidly now, because once you get, and you're that unicorn, right? And you've raised $1 billion, or you've raised $500 million. Now you're seeing them accelerate to revenue, because in order to do an IPO, you have to outperform.
Right.
You can't just be, an increase 30% a quarter, increase 40% a year. You have to blow up your numbers, and that's why you've seen Snapchat go to what they're doing, at $750,000 for this or that, and you start,
a couple of big ads, yeah.
Yeah, WhatsApp gets bought because they don't have that revenue outlet. So really, revenue has become far more important. It's gone full circle, because back in the day with Broadcast.com, you can do a $30 million IPO. Now, I just read something yesterday. There were more $100 million financing, private finances from VCs than there were IPOs. Right?
During the bubble, yeah.
No, now. Now, over the last 10 years, more IT companies have grown through private investment than through IPOs. There was only like 231 IT companies that have grown through IPOs over the last 10 years. That's crazy. So because there's no IPO market, because the SEC has screwed that up dramatically, I have to get that dig in there, you have to change all your strategies and how you deal with companies and how you expect them to grow.
Are we going to, last question, are we going to see a unicorn like that, $1 billion private company in education? Because we haven't seen it yet.
Oh, yeah. I mean, again, because there's no outlet for IPOs. I mean, you've seen Chegg, which is, had a great turnaround, and their stock price has gone up. But outside of them, you're not seeing the traditional growth path from the 90s, where, again, you show dramatic growth, you show hints of profitability, then you go to the public markets to get capital to grow. Now you have to keep on raising money privately or get bought out. And until that IPO market reappears, maybe Reg A Plus will change that, but until it reappears, then you're going to see...
Smaller IPO market,
yeah, the smaller IPO. You're going to see a lot more unicorns because they don't have the outlet to go public. So you will see a $1 billion education unicorn. The question is, what happens next? Because you're also going to start to see $1 billion unicorns go out of business as well.
Faceplants are coming.